excuse me, invoices which are not payable for 60 days, 70 days, and trying to use some of those payment cycles to try and release some of the funds. Settlement is really finding a way to do that more efficiently. We have a customer in Vietnam who wants to sell rice to Argentina. And he tells us today that he loses just the financial cost of moving up paying from Vietnamese dong to Argentinian pesos. So imagine if there was a way he could do that in an alternative but stable currency that would allow that settlement to take place at very low fees instead of huge bank charges in several days and all sorts of confirmations. So that's really the settlement bus which we're developing and the settlement layer of the protocol stack. Next is the accounting layer. Are there any accountants in the audience? Okay, well, I'm glad you counted there. I'm also an accountant. I know it's boring and it's not a famously exciting world being in. It needs to be right or else everything's messed up. So you've heard about double entry bookkeeping. No falling asleep at the back. There's a debit and there's a credit. Well, actually, with the blockchain, we've got triple entry accounting. So not only do you get accounting, cloud representation of the transaction. So in Hong Kong dollars to someone, then you only you know that you've paid that, and only they know that you've received that 1,000. And you have to rely on somebody else to say, "Hey, here's my bank statement. The bank says I paid you 1,000, so I paid you 1,000, right?" And they say, "Well, I guess so, because the bank says so." If you think instead of that being the blockchain, then you can do a lot of accounting with reference to an immutable permanent register, which is open source and can be queried by anyone to verify that transaction actually happened. So that's the accounting layer, and as I suspected, you didn't find that very interesting. So we'll move straight on. Okay, so resource sharing. Hands up anyone who has never used Uber. Wow, I didn't think we'd get any. But there is no competition in Hong Kong, right? That's why the service is so clumsy. Really? Okay. So, okay, so everyone's familiar with Uber then. You've like 2 people who don't know Uber. So do people get rich driving for Uber? Do they make a lot of money? Do they get to drive shiny, fast cars? I think we know the answer to that one. So, but the guys who own the company, they get rich, right? They get amazingly rich and do really well. The thing to think about there, if you imagine Uber as a way, as a protocol, imagine the protocol is just simply between you and the taxi driver. Taxi driver sets a price, you accept it or not, you transact to do it, and there's rules, you know, around what happens if you cancel, they cancel. If something happens, if there's a dispute, you've got kind of someone to refer to. But Big Brother doesn't take all the profit. You know, that is really what our resource sharing and liquid talent is about. The principle would be that there has to be a more equitable way of doing that. And if you think of tokenization, tokenized the taxi driving and given the drivers a token or a fraction of a token for every drive they took, we'd be hearing now about millionaire who'd driven for 5 years and collected all these tokens, and everyone would want to come in and they'd have great PR and public relations, and you know, they would be growing and growing and growing. Not that they're not, but instead they're taking most of the money and really just driving human resource, labor, down to the lowest possible price, to the bottom. You know, it's not like, hey, we know you guys work hard, would you like some more money? You know, that doesn't happen very often. So I think if you put a protocol in place that allowed the two parties to deal together in a more equitable way, that would be a lot better. So we're not going to do that with Uber or taxis or anything like that, but that's to give you an example you can understand. We're going to do that with resource sharing and with optimization of liquid talent. So the second challenge in liquid talent is that the contract you have with your employer is that they're going to look after you, they're going to give you benefits, and they're going to give you a job, and you're going to work hard for them, and hopefully they'll look after you. But more and more, there's really no jobs for life anymore. There's all sorts of automation coming and turmoil and change and all of that. So we believe there is an optimization protocol needed to make sure that individuals can use their skills and abilities and be fairly rewarded for that. Imagine if you're a developer, that you write a piece of code, and every time it's used by someone somewhere, you get a tiny piece of token reward for doing that. What happens today? You write a huge piece of code, you work all the weekends, and your boss says, oh, we need it, we need it, we need it, and you work and work and work, and you give it to them, and they say, yeah, great, thanks, okay. And then you leave the company, and well, guess what? That program you wrote doesn't belong to you. It's the property of your employer. You can't do anything with it. So if you imagine a better way of sharing that, that's really what we're all about. So I'll move on to the next one. A bunch of very experienced people, as you can see. We're represented by 8 different countries here, from Morocco to China, to Switzerland, to the US, to, let me see, Scotland, India. Yep, we've got Canada, a whole load of countries. But mostly, we're a bunch of older guys who've done supply chain for 100 years between the top 5 of us, average 25 years each. And we're looking at a new way of working with supply chain. And we have to use, obviously, a lot of technology. We're working with Ethereum at the moment. We're also got representatives from ex-Federal Reserve economists and people from Capitol Hill as lobbyists. So we're gathering quite a crew of experienced people. And we do have some really good young developers and user interface people, but mostly it's, what can I say, experienced people. Now here's our alliance, and you won't find Microsoft in here, no matter how hard you look. This is just our initial alliance. I'm not going to take you through all of these. The one I'll stop on a couple. One's Arizona State University, which I don't expect with any alumni from here today. No, didn't think so. Arizona State University is the largest university in America, and they're starting a blockchain degree, which will have 2,000 students in a year learning to do blockchain development coding. So too early for us, but for some of you who go on to start your own companies and do your own ICOs and whatever else, as Paige was talking about, that might be really interesting. You'll get interns and all sorts of things from that program. And out of 2,000, it'll be a lot to choose from. Okay, the other one. Have we any lawyers in the audience tonight? Come on, we know you're out there. Don't be afraid. You don't want to. Oh no. Okay, so this is an amalgamation of 400 attorneys in the US who are actually looking for representation in Hong Kong, Singapore, and other places. But they're trying to change how law is done. And what they think is wrong with law is that it's really done on a per hour basis. So speaking as a company who has paid a lot of legal fees recently and may or may not have paid legal fees to find out whether it's legal to market to citizens of Hong Kong a token, which may be a security or a commodity, as an example, you would think that us having paid for all that work, that if you decided you want to launch your token, and it's very similar to ours, and you go to the same lawyer and ask, okay, can I do this? You might think that the cost of that work, since they've already just done it for me, would be lower, or would be, maybe you just get it for free. You'd say, here you go, here's the report. But no, guess what? That's not happening. They might charge you even more or the same amount, but the profit goes up. So the thing that's wrong with the current mechanism, and it's not really anyone's fault, but the way it works is the more time they spend on something, so the economic model doesn't drive efficiency. It's only competition that keeps them from taking forever and charging a fortune. So new law is working on blockchain-enabled law and contracts with another company called Materium, which is just launching in the UK at the moment, to try and codify, starting with the very simplest phrases and sections of legal agreements, and looking at the commonality of the words and the sections and the paragraphs and the phrases and the way the legal agreements are used. If you threw all the legal agreements in the world into a great big AI computer and turned it around and said, okay, how many of these are the same paragraph, the same sentence, you'd be amazed. There's a lot of duplication out there, but you know, you're still paying for it like it's new every time. So there's a huge amount of duplication there. Anyway, that's what they're working on. These are our alliance partners. We have many more alliance partners, another 17 that signed up, but we're not going to put their logos on here today. Okay, it's more than blockchain. We're building ecosystems for all of these. So the one we're talking about tonight is supply chain, and specifically liquidity. We mentioned law, and that's with New Law US and Materium. We're also planning to do life sciences, tax and compliance, retail, financial services, high tech, and manufacturing. In fact, almost everything. We're trying to work on that ecosystem. So the 54 trillion supply chain market sounds like a good place to start. Okay, so now if you're paying attention now there, you'll see that the liquidity bar has disappeared from the bottom, moved up to the top, and got a lot bigger. So what does that mean? Well, that means we're starting with liquidity, and we're going to talk about that today. So, okay, there's actually 74 trillion locked up, and you can say, well, how come that's bigger than the 54 trillion? Well, guess what? When this guy supplies his wood to the factory here, they don't pay him immediately. Even though he delivered it in 2 days, they're going to take 60 days, 75 days, 90 days to pay him. Why? Well, because they can. Because they're a big company. They might be Caterpillar, DuPont, GSK, Pfizer, Apple, HP, whomever. And that's just the way they like it. They don't like to give away their money early. They want to pay later. So even though we got the wood on day 2, we don't want to pay for another 45, 60 days. So how do we get into some of the money that's trapped in there? Because it flows on, and the reason it's bigger than the 54 is it's in both places. It's all around the whole payment system, and it's between the different parties. So there's a huge amount tied up in there. Now, although we're starting with the supply chain, because it's an Ethereum, Bitcoin, blockchain group, and because cryptocurrencies are, for now, very lightly regulated, should we say, we're starting with liquidity within the crypto side. So you saw our name earlier on. See here, there's Sweet, and then there's Bridge. So you see what we did there? It's really clever. So let's start with Bridge Coin, okay? Bridge Coin will be possibly the most boring coin you've ever met, okay? As far as cryptocurrency goes, there are no Lamborghinis on Mars. There's nothing happening with this. It is pegged to a fiat currency, and it will stay pegged to reduce the exchange risk. Now, this gentleman here was discussing about how to pay bills and how to do things in currency, and Paige was talking earlier on about BitPay and trying to encourage the proliferation of cryptocurrency as a payment method. But I would ask you, has anyone heard of the bought with Bitcoin as the first transaction? Okay, so who can tell me how many thousand Bitcoin they cost? Okay, and who's going to take a guess? Very good. Who's going to take a guess at how much that's worth today? Too high, too high.
That's more like it.
Okay, $40 million. Now, someone's going to be upset about that, right? I think it's, how's that pizza tasting now? Right? I mean, that guy Laszlo, and he actually tried to sell another 10,000 Bitcoin for $50. And you can actually follow it on the Reddit link, going back to, it's only 2010. And wait for this, a guy bid $40 and not pay the $50 for it. So imagine being that guy today, having missed out on 10,000 Bitcoins for $40. Anyway, so enough about the $22.5 million pizzas. Okay, so what's wrong with that picture? Well, what's wrong with it is someone's getting upset, right? So at the time, it was $10 and it was 2 pizzas, and that seemed okay, right? But now, that same currency has increased in value so much that it's just crazy. It's just millions. So the bottom line is no one wants to do business in cryptocurrencies. If you're an avid follower of CoinMarketCap or CoinCap.io or any of these sites, you'll see that the stuff's up 30%, down 20%, and like Frank Sinatra says about New York, the city that never sleeps, cryptocurrency trading never stops. Every morning you wake up and you find out something crazy's happened on the other side of the world while you were sleeping, and now your things are worth 20% less than they were when you went to sleep. What's going on? Or they're up 40%, or you can't relax anytime. So the point is there's too much volatility, so it won't proliferate as a payment thing when people are buying it to hold on to it to get it to grow, or when it could drop down 30% or go up 40%. In the example of the wood and the factory, does the guy want to pay for his wood in something that might be double its value next week, or half its value by the time he gets paid? You can't do business that way. There's no predictability. So we need a stable coin, and we're introducing Bridge Coin, which will reduce exchange risk, be a stable value. It's pegged to the fiat. There'll be Bridge Coin US dollar will be the first one, but we do intend to do Bridge Coin Sing dollar at some point, Bridge Coin Hong Kong dollar, Bridge Coin Euro, Bridge Coin Swiss franc, etc. And we're really a business-to-business company, so it'll be about business-to-business payments, fiat peg, and a stable value. Now you might say that, well, how are you going to do that? Didn't you try? Didn't you try? Didn't Maker DAO try that? And you're right. People have been trying to do a stable currency, and it's not that easy. So we've hired ex-Federal Reserve economists and double PhD mathematicians. Are there any double PhD mathematicians? Yes. It's still a small number of people. They're working. Okay. Okay. Anyway, the point is they're not that common, and we do need very clever people, a lot cleverer than me, to help with that tethering mechanism. So we've got top developers. We've actually hired the guy who did the Maker DAO coin, which is tried to be stable against a basket of currencies, which I think proved too difficult. Plus all these advisors to help us create the scenario of holding this Bridge coin is stable. Okay, so enough about that boring coin, which will do just what it says on the tin. It will be a currency you can trade in. It will be micro-capable, it will be fast, it will be country and currency agnostic. It will be able to work from Vietnam to Argentina without any difficulty.
Who's the issuance?
We're issuing it in exchange for fiat. And anyway, the other coin, Sweet Coin, this is the more exciting coin. Well, freely, and actually it will allow people to borrow more interest. We don't intend to charge interest. We're a not-for-profit foundation. 10% of everything we collect, all proceeds from everything, will go to charitable purposes and projects. We're a not-for-profit based in Switzerland. And just on that, if you're doing a token issuance, just have a think. I know there's only one other person who's an accountant in the room, but when you debit that cash, you've got to credit something. And it's likely that what you're crediting is your revenue or sales line. So the punchline is here that the proceeds will be taxable. So you better choose somewhere where it's a low tax rate to collect that money. That's why you would choose, for example, somewhere like Switzerland. So you can pay zero interest, you can borrow more, you get free settlement in our settlement bridge and settlement protocol, and you get a free crypto bridge. You can go in and out of Bridgecoin and fiat if you put Sweetcoin in your vault. Okay, so I said we're going to start with we're talking about supply chains, but we're now going to start with a crypto example. So if there are any cryptographers out there, they'll know it's always Alice and Bob that we have to talk about. Have you studied cryptography? A few people? Okay, not so many cryptographers. Okay, so if this is the case, Alice has invested $10,000 and bought 50 Ethereum at a market price of 200. Don't reach for your phone to check the Ethereum price. This is just an old slide. Okay, so so that's 10,000. 10,000 gets her 50 Ethereum at 200 each. So that's fairly simple. Okay. So she then deposits that 50 Ethereum into her Sweetbridge fund account or vault, and we've said here she can then borrow 50% of that in the form of Bridgecoin. Remember the boring coin nobody's interested in? So it's a little bit confusing. There's 5,000 Bridgecoin, which is $5,000, which is exactly half of the 10,000. It's confusing because this is also 50, but it's exactly half. We've chosen 50, but it might be a lot lower. It could be higher, and depending on the coin, if it's rare Peppy coin, pink diamond coin, hot coin or something, then you're not going to get 50% or anything like it. That's going to be a lot lower. So this will be a range of factors will decide that percentage, and it won't be very high to start with, and it will depend on the quality of the asset you're putting in the vault. So 50 Ether has been locked up, and you get 5,000 Bridgecoin in exchange for that, which you can then, if you want to. So what can Alice do then with her 5,000 Bridgecoin? Well, because we know it's 1-to-1 with the dollar, she can go and buy groceries. She could pay the landlord. She could buy equipment. If you're mining, you could use the Bridgecoin to upgrade your graphics cards, or get that new Antminer L8 or whatever it is you've got your eyes on. Okay, so she then may either repay the Bridgecoin to the vault or instruct the vault to sell a small portion to repay her liability. So the point is here that, sorry, I forgot to mention this. The Ethereum price, we've moved on. That's why I'm confused, sorry. In this example, we've had the Ethereum price move to 300. Okay, it may go down as well when other things would happen. We would automatically sell off if the price starts dropping to repay our Bridgecoin. But in this case, it's gone up to 300. So she can either choose to pay the Bridgecoin or instruct the vault to sell a small portion of it to repay her liability. So if you think about that, she was able to, sorry, I think we've missed a slide here. Yeah, we've missed a slide. Get through this bit. So we're in buying her equipment, and then we went on a slide. Sorry, we missed that. So the other use is to spend that Bridgecoin to buy 1.2 Bitcoin. Right? So her Ethereum is still locked in the vault, still her property, but she can't go and spend it or do anything with it or send it to people or double spend it. It's locked in the vault by a smart contract. She's got 5,000 Bridgecoin out, which she can then invest in 1.2 Bitcoin, which is not too unrealistic an exchange rate. So in that example, we'll see that to the end. That's all right. Not back a slide, sorry. In that example, when the price increased here, she's getting the advantage of the Ethereum price increasing. We've ignored the Bitcoin price. So she's getting the growth in Ethereum without having to sell it. Plus, she's been able to invest in Bitcoin. So if you so she's able to borrow from her Ether without having to sell it, which led to a $5,000 profit. So the principle is there. It's effectively like being your own bank. you can actually borrow from assets that you lock on the blockchain, independently verifiable, cryptographically secured, auditable, anything you want, it's there. And you're able to borrow against it and continue to spend or speculate or whatever. So, oh, sorry, can you go back? I didn't want to change it. Next one. Okay. So if you imagine a business, those numbers might be a lot more. Imagine having 1.5 million locked up and being able to borrow against that. Imagine how it could transform your business by providing liquidity to it in the supply chain. The guy selling the wood, imagine he could borrow against the invoices and things that he's waiting to get paid on for 70 days. The liquidity, because we're locking it in the blockchain and it's a verifiable asset, changes everything. So this is our beta vault on iOS app, which is not available yet. Effectively, it's lend yourself money, interest-free for counterparty. So that's really what we're proposing, to allow businesses to borrow against existing assets. And we're looking to allow as many different classes of assets to be collateralized as possible, starting with simplest, which is cryptocurrency for regulatory purposes. But we do intend to go through all the rest. Okay, and that's all from me. Thanks very much.
Hello everyone. Thank you for coming up in large numbers and showing your support to us. Interestingly, I started my career with Hong Kong and Shanghai Banking Corporation. This was several years ago, but this is my first time in Hong Kong, and soon I'll be going to Shanghai as well. So having spent a large part of my career with banks and big financial institutions, you would wonder why I'm coming up with this, which is decentralized global capital markets platform, which is nothing but an attack on the banks and the big financial institutions. And the credit goes to our crypto founders, Satoshi Nakamoto, Vitalik Buterin, and several other innovators, who have given this power and the capacity in the hands of the common man. Not just me, any of you can also come up with a system which can completely replace a securities exchange, or as David just explained, a commercial bank which lends you the money against your own assets. So basically, anything that of a current financial system can be substituted much more elegantly, much more cost efficiently, and much more beneficially to the society. And we assume that the society is capable of self-governance. So welcome to decentralized systems. Here is an introduction about me. I am an engineer by background. I went to the Indian Institute of Technology, Chennai, and then I did my master's in finance from the Wharton School of Business. I spent a few years in investment banking. I did leveraged buyouts, very high-end banking, which is financial sponsors, acquisitions, debt capital markets, and so on. And I have been spending a few years in the blockchain industry, researching since 2015. I also represent the Ethereum Foundation in India. I introduced Vitalik Buterin since India was very nascent in and to now, the hack developers were coming up with applications for real trajectory there. I also happen to advise the Chief Minister of Andhra Pradesh, Mr. Chandrababu Naidu, who is a pioneer in technology. In fact, the Asian countries know him very well because the capital-rich countries are very eager to lend him money. They see him as a preferred borrower because they believe he is a visionary and his potential to deliver. Brief background, and that's him, Mr. Chandrababu Naidu. This was at Davos at the World Economic Forum this year in January, where I presented to him for the first time about the blockchain technology. He had immediately gone back to the state, and I read in the news that he had implemented all the suggestions I gave him, which was there in my laptop. So no bigger appreciation to me than that a chief of state taken on board what I said to him about the greatness of blockchain technology and has implemented it. And of course, he'll be able to implement it at a million times grander scale than we can ever imagine. So that was very flattering to me. I've been associated with this brand called Fintechstorm, where I brought a lot of fintech innovators across the globe, including Vitalik Buterin. As you can see, this was at the Blockchain India Summit in 2016, when India had still not woken up to the potential of this technology. And it was the first ever time we hosted a blockchain conference in India. So there was no blockchain conference before that. Okay. So, we had a mind-boggling invention in Bitcoin in 2008, and then it was followed in 2014 by Vitalik's white paper on a smart contract for anything that can be expressed as a logic that can be computed by computers. So that was a groundbreaking paper, and within it, it contained the seeds of a revolution, and a lot of use cases and real-world applications were described therein. And you are seeing a lot of ICO revolution now, but that you have seen, or at least most of them, were perfectly described in the Ethereum white paper. So go back and read the Ethereum white paper, you will see there. You will see payment systems there. So almost all the ICOs that you're seeing today, the big dizzying token growth, they are all contained in the Ethereum white paper. What is not there are some real world applications which are very revelatory even to the crypto founders. So Vitalik Buterin himself made a quote that the blockchain use cases are in the long tail and there is no killer app. So by that he meant the industry will have an application for blockchain, but it's very marginal. Meaning to say that blockchain is not going to revolutionize a $1 trillion industry, but it's going in small across every single industry. That's what he meant by a long tail of applications. But he was short-sighted. And why? Because he's a genius, but he's a genius in blockchain and technology, and he had never interacted with real-world industries like capital markets or banking. If he had, then it would have occurred to him that this is the biggest use case. And anyway, we've had the privilege of interacting and associating with Vitalik Buterin, so I could see very clearly where the use cases lie. And to put it in perspective, you take the entire crypto economy today, which includes the Bitcoin and the market cap of Ethereum and the 900 or 1,000 cryptocurrencies, and they all aggregate to about $120 billion. And compare that with this chart here, market cap is $200 billion and gold market cap is $8.2 trillion and the entire fiat currency in circulation is $1.5 trillion. And you see the stock markets, which is $66 trillion. And when you see the banks and financial institutions, they're very big in beating the drum roll of blockchain technology. They say they understand it very well. They have mandated the biggest consultants. They spend a lot of money. They have a lot of innovation centers. They have hired the biggest blockchain experts as their chief innovation officers and so on. But they're paying a mere lip service. Whatever they do in blockchain, it just uses the technology in their current existing systems. The architecture is the same. The process flow is the same. And even the actors and the players of those systems are the same. You will understand during the course of my presentation why I'm saying is perfectly true. Everything is the same. The processes are the same. The same intermediaries continue to play the same role, which is furthering their own interests. It does not do anything to you and me. It packs up. Perhaps they have some marginal improvements in their profitability. Perhaps they added to their bottom line. Perhaps they save themselves from the incoming insurgents of attackers by trying to appear as pioneers of this industry, by trying to patent, some things and so on. But really, they haven't benefited anyone. It does not even percolate down to benefiting the consumer. So you will see. Okay, so here is the ICOs by each category, and you have seen some of the biggest ICOs. And I've actually gone to lengths to study a lot of them in detail. But DigiCamp will disrupt the securities issuance market, which shockingly is left untouched by anything in blockchain so far. And that's a $66 trillion industry waiting there. And just like ICOs have disrupted the traditional equity funding, all VC investment in blockchain was completely surpassed and exceeded by the ICO investments. That means the public has completely grabbed the beauty of blockchain technology applied to ICOs. That means they have surpassed the existing systems that have existed and thrived and survived for several decades. And they have shown within 1 or 2 years, which is really, really a blip in the brief history of time, right? One or 2 years is really a blip. So you're never going to witness again history where a technology comes and so effortlessly and easily replaces what you have come to accept for decades and centuries. So with ICOs, it's already proved that customers have embraced and hugged this technology because they can see the benefits as clear as light of day. So similar thing I predict happening in the capital markets and in the banking and financial institutions. So here is the problem. You have investors and you have issuers. Investors are anyone with capital to invest, and issuers are anyone who is trying to raise money, whether it's in the form of equity or debt or crowdfunding or peer-to-peer lending and so on. So between the investors and issuers, way to transact. What is between them? A huge system with thousands and millions of intermediaries who charge whatever price they want, and we are nobody to question because it's an oligopoly, it's a behemoth, it's almost a monopolistic system, but of course it's not a monopoly, it's an oligopoly with self-determined prices, of course determined as a part of tacit collusion, which has been evidenced by organizations like OECD, which have lamented that there is collusion among the banks and there is no competitive pressures, and of course the sufferer is the end consumer or the end issuer. So we present the solution, Decentralized Global Capital Markets Platform, DigiCamp. I think that's a wrong presentation actually. Can I quickly take a second to... Sorry about that. Okay. I'm going to illustrate one really big problem, which is to do with global capital flows. And I argue that there is a problem with efficiencies of capital flows. And if any of you is well versed with economics, neoclassical economic theories predict that capital should actually flow from areas where there is a capital surplus to countries where there is high productivity and growth of the economy. However, evidence points to the contrary. Empirical evidence exists by a lot of researchers in what is termed as the allocation paradox or the allocation puzzle. And this is a very well-known term in research, where they have clearly seen and observed that countries with very high growth, who should be attracting a lot of net inflows of capital, are not actually doing so. And capital is flowing to countries which getting. This happens because there is a lot of imperfections in the market. There is information asymmetries, there is heterogeneous degrees of development of financial markets, there is heterogeneous degrees of savings rate of economies, there's demographic differences because of cultural and behavioral patterns. We save differently and we spend differently, and there is also regulatory differences and taxation regimes and so on, and the ease of investing in a particular country and so on. So there is a whole host of factors which prevent capital from acting as if it's behaving in a perfect market. So the market is imperfect. That's been established. And these are the different factors. Okay, to give you one example of the two-way global capital flows, here are emerging economies, for example, China, which is known to have one of the highest savings rates, and capital flows from China, for example, to the United States, because the financial capital in asset management industry, for example, which is very sophisticated, the financial capital has very high return here. And because the asset management industry is very sophisticated, very smooth and frictionless, the capital is able to flow very easily. You will recall that whenever there is a shock to the system, there is huge capital flights. Have you heard of the term called capital flights? And it is in response to overnight shocks. So suddenly, today the stock market indices fall and the capital has flown, to the developed economies. So this is one-way capital flow, where the household savings are flowing to the developed countries, and on the other hand, the same developed economies are transferring the capital to the emerging economies where capital enterprises are concerned, where real investment is concerned, which is called fixed capital, which goes into manufacturing, which goes into R&D, which goes into hiring people and so on. This is capital that is truly productive, which goes into innovation and wealth creation. So why is capital not flowing from Chinese household savings to Chinese enterprises that require capital? Why do the Chinese companies have to pay so much of a higher rate of capital? Why is the cost so high? Because it's going in a roundabout way. And there is millions of intermediaries you have to feed in this cycle, and you have to pay a high rate to access your own capital because the system is not efficient, because they're not able to directly transact with each other. And add to this, there is also the moral hazard problem of governments, of institutions that are supposed to look after our interests. For example, take commercial banks. They're failing actually in performing their fiduciary duty, and they're lending to clients, their favored clients, for example, the friends of prime ministers and so on, and who then go on to willfully default. And all this is adding to the cost of capital because the banks are loaded with non-performing assets, and that cost has to be absorbed by the real clients. And therefore, the real borrowers are suffering because of higher cost of capital. That is just one example of an inefficiency, and we come to the problem. The real problem is the opacity that characterizes this huge industry of capital markets. And this is my theory. The theory states that intermediaries in complex markets thrive on opacity, and they further propagate this opacity to continue and to self-aggrandize and to thrive and to progress their own self-interest. Is opacity, the more an industry attracts intermediaries, and the more there are intermediaries, the more they can take away from the surplus of the buyer and the seller. Therefore, the costs are high for everyone. So the simple thing is, if there are a lot of intermediaries, you don't benefit. The fewer the intermediaries there are, you are at benefit. So this is an article that came out in the Telegraph, which is very recent, where the OECD stated that the high levels of fees, which is almost 10%, and parallel pricing akin to tacit collusion appear to have increased among investment banks. And this increases the cost of equity and works against the long-term productivity of investment and capital. Therefore, reinforcing competitive conditions in these markets could contribute to better outcomes. So here is a look at how much fees all these investment banks made just in the first 6 months of 2017, which is $50 billion, so just among the 10 banks. So if you extrapolate it, it's $100 billion of fees made just by fee income, which is advisory income on IPOs and bond issuance and M&A and so on. This has nothing to do with the capital they lend. This is not the money they make on their capital, by risking their capital. This is the money they make just by being a lead issuer, lead advisor, and so on. Okay. This is a look at what kind of numbers of intermediaries exist in the capital markets. Therefore, it is ripe for disruption. Okay. Some more headlines there. Okay, so why is this industry what it is? Why is this ridden with such opacity? The reason is there is information asymmetry. The investors don't actually know the investment opportunities. And there is complexity of laws and regulations. Nobody understands if you want to invest whether you're doing the right thing. So you want to hire a lot of advisors and you want to hire the investment bank even if it's costing you, several millions. And you actually believe that you're not able to get the best for yourself, the best deal for yourself. You believe that the investment bank, for some reason, is going to be better than you in getting you the best deal, which is not true, by the way. And there is economies of scale. Just like in manufacturing industries, the more you have the production capacity, the cost falls down, and you have economies of scale. Similarly, in investment banks, because they deal with a lot of these issuance processes and they interact with a lot of investors, they have economies of scale in managing these investor relationships, because of course it's more efficient if one bank is dealing with a lot of investors and issuance processes. And there is also a signaling effect that the intermediary serves, because if you take on board a Goldman Sachs, then you're seeing unity that you are an investment opportunity worth considering, and therefore you have to be taken more seriously. So of course there is a value there. But I'm going to argue why it is unnecessary. So in DG Camp, we are going to propose an AI-driven, artificial intelligence-driven investment discovery. And there's going to be automated transactions. And what do these automated transactions do? It is just a smart contract platform which will automate every process of the securities issuance. For example, let's take an IPO. The process can be broken down into 3 phases. First is the pre-issuance, where you decide what the price of the issue is going to be, and you decide that by building something called an order book, which is by bringing the demand from each of the investors. And then once you decide the issue price, you actually do the issuance of securities, which is transferring the securities to your investors. And then there is post-issuance phase, where you service the securities. You give the dividends and you distribute whatever is associated with the securities, and then you also do the performance reporting for those securities. So all these transactions are nothing but a simple arithmetic average in book building, which can be very well done by smart contracts, and you don't need a bank. You needed a bank for access to investors because you don't have the contacts of investors, and I'm going to show you in my next diagram why that is not even the case. And then once you have this, once you have the primary issuance taken care of, replacing it completely by a smart contract architecture, you can also have a secondary market layer, because once the investment bank has gone out of the picture, it has just been reduced to an exchange, right? Because there's no Goldman Sachs and you want to list your security for the first time, that means you have directly gone to an exchange. And that exchange is just a smart contract exchange. It's not a NASDAQ and it's not a BSE or a Hong Kong stock exchange. So once you have listed on the stock exchange and you have seen that the smart contracts are able to function as an exchange, then we can also trade it on the secondary market. So you got the issue from the primary issuance of a security, then you can also sell it to someone and someone can buy it from you. Then that is a secondary market. Then that has become a complete exchange. And this is all done by secure cryptography, and I'm sure you all know the basics of cryptography and Bitcoin and blockchain and so on, so I don't have to explain why this technology can eminently replace the existing institutions. Okay. So here is the visual diagram of how it is done. On one side there are issuers, and they can be corporates, they can be governments, they can be individuals, they can be anyone trying to raise something on a Kickstarter. And on the other side, you have retail investors, which is individuals like you and me. And you have institutional investors, which is hedge funds, which is insurance funds, pension funds, big banks, and any fund that is set up to invest. And in between these two, instead of these millions of intermediaries that you just saw, there is a simple, radically simplified, decentralized architecture, which is just a smart contract platform which automates all these processes. And then you can still buy something from these intermediaries. You can ask them to do due diligence. You can ask them to perform a due diligence on a particular security and give you the report, and you can buy it here. You can ask them to provide a regulatory report. You can ask them to provide a risk report, whatever you want on top of this, but you don't need them to execute the transaction itself. Earlier, you thought you needed them to execute the transaction itself, and you are paying them 10%. So imagine for an IPO which is $2 trillion of value. For example, Saudi Aramco is a company that is actually doing an IPO which is worth $2 trillion. Imagine how much the lead bank gets to make just by putting their brand on the IPO. It's $85 billion to $100 billion. It's the size of the entire crypto economy, just for one deal. Do you want to attack the bank or no now? Okay. Okay, this is just a breakdown of the traditional IPO issuance process, because I just wanted to show you that actually all these steps can be broken down and translated into a smart contract or an algorithm, and they can all be executed by the existing blockchain technologies. Sorry. Keep going, please. Keep going. Keep going. Yeah, okay. Let's spend some time on this story, which is the story of Paradise Inc. trying to do an IPO. Okay, so initially Paradise Inc. thinks, okay, I'm a novice, and how do I do this IPO? I need to raise capital, but I have no clue. So since I'm clueless, I'll call some banks and see what they can try and do. And Paradise Inc. invites these banks to a beauty pageant, and these banks show up in their different attires, and they indicate the issue price. They say, okay, Paradise Inc., we do your issue at $9, $15, and so on. And Paradise Inc. picks. Paradise Inc. is, of course, naive, and they pick this bank, which is indicated $25 US, believing that this bank will be the best in terms of offering them the most optimal issue. And you understand issue, right? So if I, as a company, want to raise $100 million, I do my first public issue through an IPO, and my share price is determined by the bank, and I announce it to the world, and all of you subscribe. So that is an issue. So here, this bank is decided as the lead issuer, and all the rest go away from they recede from the picture, and this one takes center stage. And then she, being a woman, she starts playing games. Okay, so what happens here? Once she knows that she is ruling and there's no one else in the picture, she invites a few bidders from institutional investors and says, hey bidders, give me your demand book. And then she just collates all the orders and tries to build an order book. Okay, simple. And each order book has the quantity and the price. Okay, and she, being a very smart investment bank, can add 2 plus 2 and says the entire addition of this bids is X number of securities at Y weighted average price. Bank is really smart, and you couldn't do this yourself. Why? Because you don't know who these institutional investors are. Okay, so the bank, of course, you know, she being a bank, she has exclusive access to those investors, so you needed her, and she does this smart weighted average arithmetics and arrives at this price, which is $7. Note, the initial indication had been 25 USD, and now she got $7. And was she naive, or did she know it? Did she deliberately do it knowingly? Okay. So if you've been a banker, you know that banks deliberately do it because they have to say a higher bid to get your business, because every bank is trying to get the business. So it's reality. For you, Paradise Inc., it is the first and the only experience you have for an IPO. And for this bank, she's played this game a million number of times. So obviously she has, an upper hand over you. And she says, hey, we can't do it at 25 USD. Now you have to do it at 7 USD, or your issue won't be successful. So what options do you have left? None. Okay. So you say, okay, hey, bank, you're the expert. Let's go with 7 USD. If you're lucky enough for the bank to ask you, now the issue price being 6.5 USD, and then a different set of institutional investors come in and become the shareholders here. And a lot of other rejected suitors go away angrily. And who are those rejected suitors? They are people like you and me who don't have millions of dollars to invest. You just want to invest, few $1,000s. But still, you have money to invest in, some 100 shares or 200 shares and so on. And probably the bank prefers their hedge fund clients because they are paying the bank hefty premiums and fees on their different other offerings. Okay, so obviously, if you're a smart bank, then you want to keep your clients happy, then you want to give them a preferred treatment of other clients who might be actually beneficial to Paradise Inc. So in this whole process, remember that Paradise Inc. has zero control and zero access to investors and zero control over what is happening with investors because they don't interact with the investors, right? So remember, this is an emotional moment which is common public have bought into your vision, okay, as a company. They believe in your vision. They believe that you are going to deliver, redemption for them. And this is their salvage. This is their financial salvage. And they have decided to become a shareholder, and they have no means to interact with you. All they are interacting with is the bank. And what kind of a loss that is for you of this, of building a really tangible, meaningful emotional moment and a very important moment. Next, please. Okay, next, please. Next. Okay, so here is an example I have taken from some of the white papers of the traditional blockchain experts. The big 5 consultants and so on. The experts in blockchain technology, and they're advising these big banks and financial institutions. And here is their vision or architecture of how a blockchain technology is supposed to operate. Now tell me what's wrong with it. It's exactly the same system with exactly the same intermediaries, and you're doing the same thing. Why? Blockchain was not meant to do exactly the same thing. It is a cataclysmic thing. It is a revolution to do something completely differently, okay? Radically differently, to completely dramatically transform everything and to benefit you. Why would you do the same old thing? Any guesses? Why would you do the same old thing?
Just really to get the consulting money.
Also, the diagram has been produced in collaboration with the guys who are here.
Yeah.
Do they want to get out of this picture? Never. There's $66 trillion out there. So do you think anybody will create a radically different picture which will open up your eyes? Will anyone contribute to an eye-opening picture on this? Tell me. Okay? So it's our job of those who have been enlightened by the Satoshis and the Vitaliks to come up with this picture and to deliver the true redemption, right? This is where the true redemption of the common man lies. which is complete decentralization, which is completely getting rid of every single intermediary. You don't need a clearing and settlement system. You don't need a centralized securities depository. You don't need anyone that's a custodian of securities, right? I argue that you don't even need a regulator. But yes, of course, you have to live with the regulator because next week I'm going to China and someone joked to me that you're going to jail. So I say there is not going to be a better opportunity in my life as a PR exercise. Then I say to China, please come and jail me. As long as you release me later, I'm fine. So in India, you have politicians who do all sorts of gimmicks to actually court jail. Like, oh, no, please take me to jail. Because they become really popular that way. And you have the public sympathy and they become hugely successful. So, so if somebody is here from China, please don't send me to jail. Next, please. So here is a eureka moment. Okay, so blockchain is, as you know, a very pioneering thing, and it's an intellectually satisfactory thing. So I came across this theorem called the revenue equivalence theorem. At that time when I read it, it didn't occur to me that it was a Nobel Prize winning theorem, but it had the same impact on me nevertheless. And the theorem had been contributed by this famous man called Vickrey. And if you have been familiar with auctions, an exchange system is nothing but a two-sided dynamic auction. And Vickrey went a great deal in contributing to the whole auctions system. And his revenue equivalence theorem states that in any particular auction, whether it's a reverse Dutch auction, or whether it's an ascending auction or a descending auction, or the highest, last but one highest price, no matter what the auction, and no matter how many number of participants are participating in the auction, whether it's a single buyer, two buyers, or multiple buyers in a room like this and bidding, his groundbreaking discovery was that regardless of the type of the auction and regardless of the numbers of participants in the auction, the seller revenue remains the same. So at every equilibrium clearing state, at equilibrium, the seller gets the same revenue from any auction, regardless of the number of participants and regardless of the type of the auction. This to me was really mind-boggling. This was as mind-boggling as the Bitcoin or the smart contract ecosystem like the Ethereum. So I immediately applied this to capital markets and said, what do you do? What happens if you push away all the intermediaries? Then the deduction from this revenue equivalence theorem was that the surplus that the intermediaries were eating would simply be redistributed amongst us, amongst the issuers and the investors, and most likely the issuers. So therefore, we are not losing anything out of getting rid of the intermediaries. This is of course just academic, but you always knew intuitively that getting rid of intermediaries is always beneficial. Please. Okay. So here is the revelation. I'm in the land of the Hong Kong and Shanghai Bank, to whose credit I have the banking career, and I'm here to disrupt the very industry in Hong Kong and Shanghai. Okay, so here is my visual representation of how this is going to work. And mind you, this did not come from any of the excellent consultants, any of the top 100 influential blockchain influencers. Okay, so this has just come from me. So here are investors on one side, and on the other side are issuers. I just explained to you what an issue is. An issue is when you issue any security, in return for capital you get. So that means whenever you try to raise money, you give something to them. Stock or a bond or a promise to give back, like a loan. So you can do this even for syndicated loans, or you give them a reward like you do in Kickstarter. So you can give anything, but you're an issuer. And here are investors who have a lot of money, and they give you money in return for whatever you have to offer. In the case of ICO, it's the promise that you have to offer, and they're giving you. So in between the investors and issuers, instead of the tons of intermediaries that were sitting out there, now we have just one simple thing, which is a smart contract architecture, which is not even human, which is not even an institution, it's just a technological platform. Why? Because a smart contract knows when to exchange a security for value, and it's irreversible, and it can be trusted 100%, and it is guaranteed, it's cryptographically secured, it's proven, all sorts of things. Okay, use all adjectives. So you have a smart contract platform. You only need one more thing, which is some Oracle data feeds, because what is a smart contract? A smart contract, as defined by Vitalik Buterin, is a system where two or more parties pull together some value at point of time, let's say t0, and then at point of time later at t, the value is to be redistributed among these multiple parties, whether it's one party or two parties or n number of parties, according to a formula which is predetermined. Okay, so at point t0, you say you have a formula saying at point t, you redistribute the money we have pulled in according to this formula. The only thing that you don't know right now, or the formula doesn't know right now, is an event or a series of events that are going to happen between now and between t0 and t. And you don't know the outcome of those events. But smart contract does not care. As long as you have put what the event is and how it should behave depending on the outcome of the event, the smart contract does not care that you don't know what the outcome is. And the smart contract will redistribute the payoffs exactly as you envision. Even in a game of chance where you're taking lottery or you're taking a show of cards or whatever, you can deal with completely unpredictable outcomes absolutely predictably, absolutely fairly and reliably. Okay, so this is the smart contract system, and here you have one more layer here. You can invest either through crypto or through fiat, and it gets converted into an intrinsic currency, which most likely is going to be the boring currency, like a boring currency that David just defined. Okay, it's pegged to a stable value because it has no value outside. Its only sole purpose is to exchange with securities at a predetermined value inside of the system, outside of the system. So it's just a digital store of value that interacts with the securities and exchanges with the securities. Okay, so I already have one use case of David, and if David says it's very complicated to achieve that, then I'm going to rely on the fact that this whole innovation is open source, and I'm going to benefit from David's hiring, the double PhDs and the world-renowned mathematicians and so on. Sorry, I don't know why this is repeating. Go on, please, go on. Keep clicking. Keep clicking. Click. That would be faster. Click more. Okay. So DigiCamp is potentially one of the biggest real-world use cases. Okay, real-world applications. And I say 2017 is the annus mirabilis. That means the year of miracles, or it's the year when blockchain went mainstream. And the real-world applications of blockchain started disrupting, penetrating every single real industry. Okay. And DigiCamp envisages a smart contract architecture replacing the manual processes involved in investment banking as far as the issuance of primary securities is concerned. And once you have the primary securities issuance taken care of by the system, then you can very well do it even for the secondary market trading. And therefore, it becomes an exchange. It has replaced an investment bank, an exchange. So the only trouble now is, do we have the technology for a decentralized exchange to compete with the centralized exchanges? Performance of nanoseconds. The throughput of centralized exchanges, one thing they do very well is that they have nanosecond efficiency, nanosecond response. That is why you have the quantum trading and the algo trading and so on. Of course, blockchain technology is not yet there. Okay, all we have right now is the crypto exchanges. They're doing it decentralized, and the crypto lovers don't mind whether you get to exchange something on this crypto exchange in 1 minute or in a nanosecond. Do you mind? Had to pay any intermediary and zero fees. Do you really care whether you're spending 1 minute or 10 minutes or nanosecond? You don't. Okay, at least for the primary issuance, you don't, because as you saw in the ICOs, people were waiting, 3 days to confirm a smart contract transaction, to confirm an Ethereum transaction. People were waiting 1 or 2 weeks to confirm whether they got allocation of a token or not. Okay, so the crypto lovers don't really care. But the beautiful and the profound thing now is that our crypto founders have come up with a protocol that can take on these centralized exchanges. The protocol has not been built yet, so that it's not in execution phase, but they have defined the technology. There is a protocol now which says that you can do all these millions of transactions that currently happen in the centralized exchanges. You can do the order matching, you can do the order filling, you can take the buyers and sellers and have the order fulfillment and so on, and in seconds. And you can also do millions of transactions on these exchanges. So we are going to be the first ones to build this really ambitious and challenging protocol that has just been conceptualized by some of the leading crypto founders, like Vitalik, for example. And we are going to take elements of these and create a new protocol, because as and when we build a decentralized exchange, at some point it needs to take into account a flexibility to take on the centralized exchange, to compete with it on the throughput and the transactions per second and the speed and so on. Okay, so currently there is an exchange, at least in concept. There is a technology, and we are going to start building that once the ICO is over. Next. Okay. So here is a definition of DGCAM. It's a blockchain and smart contract driven platform where issuers can access a broad class of primary market investors, both institutional and retail, and can complete a variety of automated transactions and processes such as book building, auctions, dividend distributions, and can issue a broad range of digital assets to investors. And investors of every type, jurisdiction, and preferred risk and liquidity preference and so on can access investment opportunities across the globe. And you don't need to be a Goldman Sachs, and you don't need to be a BlackRock to be able to participate in these opportunities. Anyone with any sort of liquidity, any sort of capital, any sort of wealth can participate in this system. And you can also access the regulatory reports, due diligence, risk reports, and so on without having to go through the intermediaries for the main transaction. And a secondary market place can complement the system, where buyers, sellers, arbitrageurs, market makers, all of them can come in. They can trade. But of course, a decentralized system makes sure that the most efficient one is most rewarded. Oligopolistic thing where there is tacit collusion and they're determining things. It can be a multi-country platform. One second. So what can this do? This can be an efficient platform for enabling capital flows between countries. So an investment bank, we started with an exchange, and now this can be an enabler for efficiencies in global capital flows across multiple countries. And this can be a potential app marketplace for the asset management industry. The asset managers can come and build some applications on top of this protocol, where they say, hey, we create a fund on top of this, and we are the best selectors, and you come and invest. And of course, there'll be competition, and the public can choose the best fund and so on. And this is a potential platform for independent service providers. who can do due diligence, who can do regulatory reports and stuff. So basically, this means decentralization of innovation. So the innovator can be from anywhere, from Cambodia, from Namibia, from Korea, and they can be accessing investors from the Silicon Valley or from China. China is the new global hub for investors, and anybody from anywhere can access investment opportunities, which are purely assessed by merit and not because of their privileged access to geography and so on. So on any given day, this can play the role of an exchange, play the role of an investment bank, anything a Kickstarter can do, anything an online peer-to-peer lending platform can do. And the sheer size of this online peer-to-peer lending industry is soon going to be $1 billion. And we are working on creating a blockchain core architecture that can enable all these things. And I have one more speaker to introduce today, who is going to talk a little bit more on digitizing tokens or tokenizing any sort of a digital asset, whether it's real estate or gold or security or bonds and so on. So you're already starting to see that the threat is real for the banking and financial institutions industry, because they are no longer dealing with the safe consultants and the blockchain experts. They are dealing with the real Satoshi and Vitalik fans. And we want to give the world what these guys have given, but in a magnified degree and scale. We want to give the benefits of decentralization, the benefits of blockchain to every industry like the incumbents can never do. Thank you. I have a lot more slides, but I just finished because we have.
It's possible to switch sources to the
Slides? Sorry?
No, it's possible to switch to Beamer source.
This is no? No, this one? Or I can open your thing from mine.
Yeah, maybe that's. How can we? Is this
how
the
much
download
font?
for the Beamer?
Okay, here. Yes. You want the old one or the new one?
The new one. I also put it on the USB stick.
Oh, you put it on the USB stick? Okay, then you can put it. Okay, then you know what to.
Okay. First of all, thank you very much for having me here today. I'm Max from Breakbot, and Breakbot enables or is the future of asset trading on the blockchain. We still have left. I don't know how interested you are. Generally, we usually begin by taking a quick look at the current banking standard, one of the most used e-wallets out there. It's a white label solution, so it's used by many banks. So this pictogram simply shows each different component of this typical e-wallet, beginning with information security, and I don't think we need to discuss that in detail. It's quite clear the blockchain is by far the most secure way we know currently how to store data digitally and encrypt it. So we can immediately jump to the next point, which is KYC, know your customer. And that's actually one of the most annoying parts currently when you want to open a bank account or want to go to any financial institution. Either you're at a very traditional bank and you have to go to the counter, you have to do it face-to-face, then it takes at least an hour. Very annoying process. The challenger banks that are a bit more up-to-date are doing this through something similar to Skype, so simply via video chat. Nevertheless, there's still a huge problem with this, and that is that although there's only one physical person behind it, there might be multiple online IDs. simply because you're changing your address, you're changing your telephone number, and you're not updating this for all the different financial institutions you're using. So the obvious choice, or the obvious best choice for this is the blockchain, because the blockchain enables you to share your personal data with multiple financial institutions, and only you have access to your data. You are the only one that is controlling it, and you decide whether you want to update information or not, and you can update it for all the institutions at once. So this is already being developed. The main field is currently IBM. I expect that within the next 3 years we will most definitely use this solution or a similar solution for verification. Next part is transaction processing, which is actually one of the biggest issues within the blockchain industry. So currently the Bitcoin network processes between 3 to 4 transactions. And if we look into the more traditional sector, PayPal currently processes 1,600 transactions per second. MasterCard, Visa processes up to 50,000 transactions per second. So that's a huge issue. And there are many ideas around it. There are many people who are saying, okay, we need to move off-chain. We have to do it directly peer-to-peer or but nevertheless, all of these new ideas are not really thought out well. For Ethereum, there was supposed to be an update in March this year called Raiden. According to this update, Ethereum would be able to process up to 1 million transactions per second. Nevertheless, we haven't yet anything since February from the developers, so it remains uncertain what will happen there. There are a couple of very interesting products. One of the most interesting ones is IOTA, which is particularly designed for IoT, as the name says, for Internet of Things. They estimate that within the next 20 years, we will have 50 billion devices that will communicate amongst each other, and they all need to send micropayments among each other. So IOTA already enables up to 60,000 transactions currently per second, and they're still scaling this up. Yeah, risk management is also quite interesting. So when you hear about Bitcoin, here it's a bit different, but within Europe, Bitcoin is mainly known for either money laundering, supporting terrorism, buying drugs in the darknet, or similar. And here, in mainland China, it's known as rich guys getting their money out of China in one of the easiest and most convenient ways. Nevertheless, Bitcoin is actually much better when it comes to following the streams of money compared to our traditional system. So with Swift, you can lose the money, but with Bitcoin within the blockchain, you have a continuous stream. So this goes so far that the CIA says Bitcoin is one of the best inventions ever for us, because we can immediately see if somebody bought drugs in the darknet or supported a terrorist organization with his funds. And there are already a couple of companies that are doing this for the private sector. The biggest one is Chainalysis. They basically analyze from where the Bitcoin are coming. They can see, okay, these Bitcoin were used to gamble, these Bitcoin were used to buy drugs in the darknet, and therefore they can tag the user. If the user has a lot of dirty coins, they can simply ban or report them, which goes hand in hand with the next point, reporting. Yeah, so we can jump to bank integration, clearing and settlement via Swift. We also don't really need to discuss this in detail. We all know that Swift transactions are a bit annoying. They're very slow. They take at least 3 days, and that's already fast. They're ridiculously expensive. The blockchain covers that. The Bitcoin blockchain covers that in a couple of minutes, worldwide, internationally, so way more advanced. Also not so interesting in the crypto community, simply because most of the projects that are developed within the crypto community are developed open source anyways, meaning that everybody can replicate the code, can use the code completely for free. Accounting and billing, I believe, was discussed before, so we can skip that. Payments, payouts, not so interesting, but still one of the biggest issues. How do we get into the crypto world from fiat and out of the crypto world? We're still extremely dependent on banks, and there are not many good ideas how we will solve this. Of course, the ideal situation would be you get paid in crypto and you spend with crypto. Last point is access channels. So in the traditional sector, that would be APIs. Nevertheless, within the blockchain world, we don't really have this sort of thinking. Where it's more interesting is how will different blockchains interact among each other. So nobody nowadays believes really that there will be one blockchain to rule them all. The consensus currently is more towards We will have multiple blockchains, each operating for a specialized field. We will have private blockchains, but they all need to communicate among each other. And Dr. Gavin Wood, who is the co-founder of Ethereum, is currently working on a project called Polkadot, which enables exactly that, simply connecting different blockchains. So, let's look into the traditional asset trading market. First of all, let's take the example of investing into a real estate fund. It is a very illiquid investment. Getting in and getting out takes days. It's very complex. There may be very high risk involved depending on the fund's performance, and the entry barriers are very high. So with many funds or exchange traded funds, you have a minimum investment of, let's say, for instance, 100,000 euros. So you're excluding a large part of our population. Also from the fund manager side, it's a bit difficult because with the bank, he has very high fees to sell his products. If he isn't selling his products over the bank, there's a strong competitive disadvantage because these are very small fund. He has to take care of the sales himself. It's very difficult to get to the status of a bigger fund. Also, there's a complete lack of access to the global market. So the exchange traded, the ETF market is usually geographically extremely restricted. Thanks. So at BritBlock, we solve this, and I'll begin by introducing our team, our CXX, beginning with Jacob. Jacob has a background in real estate. He used to be a real estate developer developing several housing projects in Germany. Was on the brink of setting up his own real estate fund, and then noticed all of the problems that were occurring from setting up your own real estate fund and decided to meet his old friend Martin. Martin is very active in the Bitcoin scene since many, many years. He founded Bitwala, which was one of the first and still is one of the biggest Bitcoin-related startups in Germany, even within Europe. He also co-founded Transistor Co-working, which is Germany's largest fintech co-working space, where you can pay with several cryptocurrencies. And he's the founder of Bitcoins Berlin, which is Germany's largest Bitcoin incubator. Next to Martin is Philip. Philip is our CTO. He has a background from McKinsey, and he's currently leading a team of 6 developers working with us. Our lead developer, Marius, he previously worked for Coinbase and Qubits.
Do you have how many more slides do you have?
Not many, 6.
Because I need to take my laptop.
I'll hurry.
So the common thing with all of these blockchain innovations we've discussed before are basically 3 things. First of all, either they make it more accessible, they make it easier to use, or they make it more cost efficient, much more cheaper. And this is exactly what we're doing at BritBlock. We have 3 main parts in the beginning that are real estate funds, coin funds, and exchange traded funds. So the coin funds are pretty much similar to the real estate funds, to the exchange traded funds. That they are like a basket of several cryptocurrencies, and you can invest into several cryptocurrencies with one click instead of downloading each wallet individually. I'm going to explain a bit what we are doing using the example of real estate funds. So the current process is, first of all, you have to do your research. You have to look where you want to invest. You have to select one of the properties. You have to go to a middleman. You have to analyze the project. You have to go to the land registry, get the notary signing the papers, completing your profile, preparing more documents, get governmental approval, then invest, and then wait 5 to 6 months at least to get any returns. And we are basically cutting down these 11 steps to 3 steps. You select the property you want to invest in on our website. You complete your user profile. There's some very basic KYC, so you have to show your passport and utility bill, and you invest. And you invest directly with your favorite cryptocurrency, which we all is Ether. So basically, you simply invest into a real estate project with Ether, and you will receive monthly dividends. For the real estate project, you will receive a so-called proof of asset token. This is being developed already. Our main smart contract is already developed. That simply outlines or is basically the connection between the real world and the blockchain. So the way it works, this is a little bit more complicated. Our token structure is not so easy to understand. This is mainly due to regulatory issues. Basically, you contribute in Ether, Bitcoin, or Litecoin, then you receive BrickBlock tokens. You can generate weekly access tokens, and these access tokens are used to pay the fees on the platform for listing or selling a product. A bit context, we don't have to go into detail. If you want to know it in more detail, we can discuss it later. So what we're doing now, our next big step is in 2 months, we're going to sell the first real estate project on the blockchain. That will be a real estate project in Germany. We're particularly looking at social housing, so 80% of the monthly rent is paid by the German government itself, which makes it a very secure and safe investment. Yeah, that's our pilot project, and from there on we hope to convince multiple other countries to follow the lead. Currently, from the regulatory side, we are only able to do this in Germany, but we hope that by showing that this works very well, we can convince other governments to follow the lead. So just to conclude, first of all, you can invest from anywhere in the world besides the United States into real estate projects or later exchange-traded funds. In Germany, it is cheaper than the current way of doing it. You can trade your assets, your exchange-traded funds 24/7 instead of from, let's say, 9 to 6 o'clock with current stock exchanges. Clearing and settlement takes place in 10 minutes, and it's a completely banking-independent asset system. Thank you very much.
Thank you.
So please wait here while I go and take care of pizza payments and stuff.
Okay,
So if you have
so-
any questions, I want to know that.
Pizza's ready. Please help yourselves. And we're happy to answer any questions from the audience. Aretha's going off to make a payment, but I'm happy to answer any questions. And after the pizza, we'll be going to a place called Grappas, where I believe all the other Bitcoin people are going.
What place?
Grappas. Okay, so any questions for myself, Paige, who might be somewhere out there somewhere, and Matt?
Yeah. Have we got 2 microphones?
I don't think so.
Okay. Please get some pizza. We don't have to.
Regarding the
It's on.
yeah. Will the tokens which represent the real world assets, will they represent legal ownership?
Yes, yes. Basically, there are 2 structures. So we have the normal regulatory system within Germany with a little bit innovative land registry where your name will be in. And on top of that, there will be the token. And the token, even if, let's say, for instance, the Ethereum blockchain would completely collapse and would fall away, you would still be the registered owner of, like, let's say, 5% of this real estate house.
And is it possible to buy 100% of the property?
Yes,
Through the platform?
theoretically, yes.
And are you worried that it might be classified as security in that case?
This is the thing, like, this is the, I can't show you the display anymore, but this is why our token function is so complex. So the BrickBlock tokens we are selling in our ICO are not a security. They're really only there to access the platform. So they're like license keys. But the tokens that are representing the housing project, they are in fact a security. That's
Okay. Any other questions? Just pass the microphone. Sorry.
I just stop.
Okay.
So the company that owns the property, the company that owns the property and the company that issued are 2 different companies, right? I guess you can't put them both under the same company.
Yes. Well, basically, it works like that. For the pilot project, we as a company are going to sell the house, but only for the pilot project. In the long run, we want to be a bit like eBay. We're bringing buyers and sellers together. So anybody who has a proven record can set up his or her real estate fund on our platform. We take care of the entire due diligence. And then basically the company is issuing the token itself more or less because it's all a smart contract, it's all automated. So it's a plug and play framework.
So currently, this company that that is going to own the property? Where is it registered? Is it in Germany or is
For our pilot project, our company is registered in Gibraltar, and we have a German office as well.
Any more questions about the pizza?
Hi, thanks for flying Hong Kong first. Currently, I own Bitcoin and Ether. I'm considering to invest in my ICO. So my question is, most token of ICO, in order not to be considered as a security, they don't distribute dividends, for example. So if I purchase those tokens, how could I share the fruit? How can I share the growth of the ICO company? So this part I haven't figured out. Thank you.
I'll take that. I suggest you look at a website called icostats.com, icostats.com. And this is, again, not investment advice, but if you look there, you can click on return on investment, ROI, since ICO, return on investment versus Ethereum. And I know you said that something wasn't a security because there's no dividends, but actually it's more complicated than that, or so our legal team tells us, at great expense. It's very complicated. But there's lots of other ways that it might be a security other than just paying dividends. So do take good legal advice for any jurisdiction. But if you go to that website, you'll see that, for example, 0x that launched recently is now worth 7 times, and actually went up to 16 times, 15.8 times after launch. Aragon is 3 or 4 times. BAT, Brave Browser, is 5 or 6 times. So when you're asking how do you get your money out, it's really unlike normal shares, where you'd have to go and find, does anybody want to buy my company shares, please, and try and sell them, and then work out what price to sell them at, and sign all the papers and do all that. It can all happen on these exchanges in minutes, seconds, and you're out of that token again, and you've made whatever money was in between the ICO price and when you sold them. Of course, it can go down as well as up, but there's no question that people are making huge amounts of money out of this. It just might not be you, but it might be somebody else, or maybe you are, I don't know. But no, there's definitely ways to make money out of ICOs. And one of the interesting things is how bullish you are, is how confident you are in the Ethereum network, as an example, and whether you're going to hold all of that or whether you actually want to get some of it into fiat, into dollars or US dollars. So as soon as you change it back into that fiat currency, guess what it's going to do? You're going to have no downs, no ups. You won't get to wake up in the morning and check those numbers and see what's happening. Why is it doing this? I have no idea. But so it's up to you to take that decision. I'd say don't invest anything you can't afford to lose. I think once asset managers and investment funds start recommending a percentage is allocated to crypto assets, then it's going mainstream. But right now,
it's already happening.
No, it's happening. Okay,
Yeah.
so it's beginning. Does that answer your question?
So it really depends on the token structure of each different project. So there are some projects which have abnormal growth for no reason, which is pure speculation or pure pumping in the exchanges. But then there are other token structures where the token has an actual use, where it's really used for something, where it's used to, let's say, access the platform where there's a demand, and that's the very simple demand and supply curve, right? So for our project, you need the token if you want to list or if you want to buy a real estate project, or if you want to list or buy an ETF. So just as an example, let's say we're going to sell 10 apartment complexes within Germany, each worth 5 million. Then there is going to be at least more or less 3% fee, which has to be paid, or let's for simplicity calculate with 5% fee, which has to be paid with BritBlock tokens. So the demand for BritBlock tokens is already in the millions, which is pretty good. So, of course, scaling this will lead to different numbers. 50 million is not so much in the volume, but we're in a very, very early phase. And there are many other projects where the token itself really has a value in the sense that you're using it for something or that you have to spend it for something. And that creates the typical, the natural demand. Besides that, there's of course a lot of room for speculation. So you can also, I mean, one tactic many people are doing is they invest, I don't know, 20 or 30 or $50 into multiple shit coins, and some of them miraculously go up by over 600%. It's a gamble. It's still Wild West, and that won't change until there's more regulation in place for these tokens.
Could you repeat the website again?
Yes.
ICO?
ICOstats.com.
Stats.
I know the developer stats, as in statistics. So ICOstats.com.
Does anyone want to comment on the future of ICO in China?
That's a tough one. I don't really have, I'm not a lawyer. I can't give you a legal opinion, but I know that China wants to be at the forefront of industry, commerce, business transactions worldwide, and they want to be a worldwide player. So you don't get there by just banning everything. That's not going to work. It's a really interesting situation. We have, on the one hand, I think Max was saying we can't market to the US. We're actually going to market to the US, and we've paid quite a lot of legal fees to check that that's going to be okay. But up until now, there's been almost nothing you could market to the US. So if there's nothing you can market to China for just now, until they lift the freeze, nothing you can market to the US, you're left with the rest of the world. But no, I think you'll find that both of those countries actually quite like money. They're very fond of it. And if there's stuff going on involving making lots of it and lots of it flowing in, they'll definitely want to be a part of that. I think they might start regulating exchanges and regulating ICO issuances and having you register, and might have to do inconvenient things like prepare a set of accounts or employ auditors or one of these other non-fun things to do when you're raising hundreds of millions of dollars. Anyway, hopefully that answers your question.
Just to add a small thing, I think it could theoretically be a good thing, because particularly in China there were a lot of scams, like really bad scams. So, for instance, even my friend's mother, who is from China, she is 65 now, invested into an ICO scam, but she has no knowledge about blockchain. She doesn't know anything about cryptocurrency. But there were people walking around in her village telling her, okay, if you invest in us, you can quadruple your savings within 2 days. And I think it's very good that this is banned by the Chinese government. And I hope that the environment within China.
Questions?
Hi. This is leading on from the China ban. Now that Hong Kong is now officially, quite possibly, the only place in China that is actually legal for ICOs to operate, how do you envision that, playing into any of your plans or stuff when it comes to expansion here?
I think I did mention that Hong Kong is one of the jurisdictions that we are actually paying for qualified legal advice on the launch of our tokens. And like we said, it is actually quite complicated to decide whether you're a security or a commodity and whether you're hit by any other regulations or laws. So we're definitely in. We're not going to pull out or change our minds. We'll get advice and we'll tailor what we offer in Hong Kong to meet that. I think you'll find a lot of lawyers making a lot of money out of giving people lots of advice as the regulation comes in. But as Max said, if it stops people being ripped off and people doing things where they have absolutely no intention of doing anything other than running away with your money, then that's fine. I mean, only really the people involved in the projects know their own motives and their objectives. But I think Hong Kong probably will follow China's lead to some extent, because that's usually what happens. But you could also be a slightly different flavor, and it's always been an experimental testing ground for financial products and financial solutions. So it might be the test zone for China in Hong Kong. That's what I would do if it was up to me.
So how, maybe the answer, the question was answered, but how is the price determined? I mean, what would be the supply and the demand for these cryptocurrencies?
I'll try and repeat the question. You're asking how supply and demand is created?
Yeah.
Well, I think
finally how the price is determined.
Well, the price is supply and demand, and they're quoted on exchanges. It is really just simple market economics. The difference is, unlike shares and share capital in companies and corporations that require a lot of filing, recording, technical things and rules, and people can't sell, people can't buy, and all sorts of different things. With these tokens, it's literally just decided by the market price. And as Max said, some of that gain you'll see is just pure speculation. People coming in to watch the price go up, buy, and then trying to jump out before it goes down again. But it's literally just supply and demand.
But who created supply?
The supply is usually determined at the point of the ICO, when there's a fixed number of tokens announced as being issued. And then they're issued and they're offered for public sale. And then the price floats freely after that, just based on whether people buy it or sell it. And some of them have gone down. I've made some terrible investments. I think I bought Bancor, which is like right at the bottom of the league tables for how it's done since its launch. I got out of Bitcoin because there was a fork coming up, only to find that if I'd kept my Bitcoins there, they would have given birth to nice little baby Bitcoins called Bitcoin Cash. They're not quite worth as much as Bitcoin, but so I can't give investment advice based on those results. But some of the things I've done have been good, but you're going to have some winners, some losers. It's just very exciting to be able to trade, to deal, to do all this stuff just as a normal individual. You don't have to be a bank or a financial institution or an exchange. You don't have to be rich. They're all micro capable. I think, as Max was saying, you can put $10, $20 into these. People can invest from developing countries in the third world. It's just liquidity for everyone, and there will be some shit coins out there, pardon my language, but they will be there. But there'll also be some spectacular successes. If you look at Ethereum and you look at the guy trying to sell his 10,000 Bitcoins for $50, those were very successful deals if the people had taken them. Like the guy who sold the 2 pizzas, I bet he's pretty happy as long as he held on to them and didn't sell the coins again. Anyway, any other questions?
This is regarding the speed pitch. So, how do you manage? How do you plan to manage the credit risk when someone borrows against the receivables? Will you be only restricting yourself to investment grade plans, or any small medium companies can use?
Yeah, I think you're talking about credit risk. There's a couple of different risks. There's the risk that the collateral drops in value to below what we've given out as bridge coin. So we will have a mechanism where if it approaches a certain percentage of the sell line, we will sell the asset in order to liquidate what's owed to us and close out the account. And obviously, based on the different quality of the different assets, we'll make a different risk assessment. And also that 50% that we talked about getting to borrow, if that's against rare Pepe coin or something, it might be a lot lower than against Bitcoin or Ethereum or the class of asset that you're talking about.
Sorry, I meant to ask. I meant to ask from the point of view of a company discounting its receivables essentially.
Yes.
For managing the supply chain. So will you be restricting yourself to bills from, say, only an investment grade company like Apple, or even a small company can come to you with bills from an unknown company and tell you to discount something like that?
Okay. Really interesting point. I've worked for the last 17 years in the supply chain, watching the world's largest companies benefit from some of the smallest ones not being able to borrow. We will be trying to help out everyone we can, and it may be that the quality of your asset that you want to lock will be determined by your history, which is also on the blockchain, whether you pay on time, whether you collect on time, depending on which side you're on. And we very much want to deal with the small to medium-sized companies because they're the ones that need the money most. The big companies have got loads of working capital and just play around with it easily. They don't need our help. But small and medium-sized companies absolutely do. So that's definitely what we'd like to do and unlock some of that value. But the amount you get back on your invoices, say, will depend on your history. But that won't be, what can I say, hocus pocus. That will be based on the accounting protocol. And I think, as Max pointed to, the accounting on the blockchain, which will give us irrefutable detail of what's actually happened. Did you pay your bills on time? Did you collect your invoices on time? Were they paid in full? Were they disputed? Were they rejected? So you'll get a more accurate credit score, if you like, and you'll get a risk line based on that. And you'll also have to make sure you have title to it. So you can't go off and sell them to someone else, which is another problem in the invoice discounting. Does that answer your question? Okay, any? Okay.
So the majority of the altcoins usually crash right after a list or ICO happens. What's going to differentiate ICO from every other ICO that's not Ethereum?
Well, I don't know where you're getting your statistics from, but if you go to ICO stats, you'll see there's actually only one coin listed there, which has done worse than what it listed at ICO. Now, if what you mean is they come down after they've gone up, that's true. They do, but that's just, what can I say, whalers gonna whale. You know, the guys who've got the tens of millions in this stuff, I don't know who they are, but they're out there, and they obviously are, a Russian friend is gone, but they obviously don't have any problem getting their money into crypto at Coinbase or wherever. They're obviously able to drop 100,000 Ethereum value of these things and make the coins crash, and then buy it again and make them rise. So there's a lot of manipulation going on, and not all of it's in the best interest of everybody. So I mean, when the regulation comes, it will deal with things like insider trading and manipulation and what's it called, wash transactions and fake things on exchanges. So there's all those things that we probably need some regulation around. But all I know is if you bought into most of the ICOs, you'll find they've actually gone up in value since the launch date.
As an accountant, can you blockchain is obviously a basic fundamental change from the existing system. As an accountant, can you comment on what is your of the future accounting and auditing is like?
Hello, accountant. Oh, fantastic. Oh, here's Paige.
I'm not going to answer an accounting question.
She's not going to answer any accounting questions.
No,
okay,
no.
So great question. I know you all stayed late just to hear about accounting and the blockchain. Tell me it's true. No, it's. I think it's accounting. That there's a few things that are challenging. The great thing is there'll be an irrefutable record. I think we talked about triple entry. Talked about being able to refer to an external source. This is the auditor and the taxman's dream. Imagine for Max's shares or tokens in real estate that there's a tax that's accrued. Imagine if they can say to the taxman, let's say in Germany, where there's 7% tax or something on certain parts of real estate transactions. They approach the taxman and say, hey, when this happens, we're going to programmatically put it in and we'll collect it for you and we'll give it to you. And we'll put it in the blockchain so you can audit it. You can check whether we've done our numbers correctly, and we're going to remit it to you automatically. That's a dream for the taxman. They will love that. In terms of accounting and auditing, there will be more information, but it doesn't solve any of the really big problems of accounting, such as revenue recognition, operating leases, capital leases. I'm losing the audience here, but there's still difficult things to do in accounting that just because you say blockchain in front of them doesn't make them easier. It doesn't make it any easier. But what it does do is provide an irrefutable, open source, auditable, place for it. I mean, people complain about all the frauds that are done on the blockchain, the DAO, the parity wallet hack, and someone listed that all this money has been stolen. But I'd say, well, why do we know that it's all been stolen? Well, because it's on the blockchain, and just like what happens in Vegas stays in Vegas, and that's trademarked, by the way, so I've just made a mistake saying that. But what happens in Vegas, if you think about the blockchain, what happens on the blockchain stays on the blockchain forever and ever and ever. So if a transaction happens there, then you're able to query it and go back to that and see exactly what's happened. So it's not, it's irrefutable as evidence. So it's not a great choice for pirates or drug dealers or any of these people, because it can always be queried and you can always look it up. So the difficult stuff of accounting correctly, revenue recognition, all these other things, that won't be solved, but we will have a place to go to prove transactions have happened and to audit them. So I think that will change a lot. Okay, is it pizza time? Almost. Okay.
No eating for you.
I have a question about Sweet Bridge. Okay, that's your project. So back to Alice, you said will be put on Ether as a collateral. Let's say I can borrow 5,000 Bitcoin. That's right. So exchange to 5,000 US dollar at the end, right? So when I return those 5,000 Bitcoin, is this still $1? My question is this packed with the US dollars? Because if it appreciate, I would need to return more, right?
Yeah, that's the whole point of Bridgecoin. Remember, we described it as the most boring coin in the world. It's going to do just what it says on the tin. It's going to bridge the old economy to the new economy. It's going to stay stuck to the dollar. It's going to be tethered to the dollar so that it doesn't go up or down.
So that means you become the money changer between the different.
Yeah. It's a safe haven to go where it's not going to go all over the place, but it's cryptographically secure, micro-capable, country agnostic. It doesn't care what country you're coming from or going to, and it's all those other advantages.
So my follow-up question would be, since you charge 0 interest rate,
yes,
and we would face some credit risk because your LTV is only 50%. So how do you make money?
We will take fees on the settlement bus between points and 3 basis points. Once the network kicks off, we hope to get down to 3. Like I said, we're a not-for-profit Swiss foundation. We're not trying to make bucket loads of money out of it. We're trying to make it easy for businesses to do business with each other. So we hope to keep those transaction costs as low as possible, but we don't have to charge an interest rate. Unlike any of you dealing with Hong Kong dollars or American dollars, you don't get to choose. My currency, United Kingdom pounds, I woke up one morning to find that my country had voted to leave Europe. And my pounds were worth 15% less than they were the night before. Nobody asked me, well, they did, and I said, don't do it, but it didn't stop them. So that's what happened. And also the interest rate is set by the central bank. So you can't borrow and deal without having to deal with those percentages and those interest rates. So we're trying to create an interest-free method. Okay, last question.
Actually, we are now helping some friends to set up 2 ICO projects in Singapore. I'm a Singaporean, Okay. So what happens right now in Singapore is that the government. Yes. You were there.
Yeah, we were there last night.
I was also there last night.
You're kidding?
Oh wow, you're following us.
Yeah, there was a conference at SUS.
Okay.
So anyway, the government MAS is forming this National Payment Council.
Yes.
So this council next time when we want to set up exchange in Singapore, you have to get a license from the council. And this council may also monitor, I don't know, maybe ICOs and other things as well. So did you have any inside information whether Hong Kong governments will be doing the same thing or something along the line?
I can answer that. No, I don't. I could speculate for a good 5 minutes or so, but I'm getting a lot of no's for that. So no, I think they might do something similar. There's regulation coming. I think we were all in agreement it's probably not a bad thing. And I would take good legal advice before you launch anything or market any product. Okay. The drinks are at Grappa's after the pizza. We hope to see you there. And if any of you want to approach us and ask any questions or anything, please do. Otherwise, thank you very much and enjoy the pizza.
And then let's.
Anyone has questions for me? I just returned from the pizza payment. Yeah, 1 second. Let me take the mic.
Yes, sure.
Okay.
Rex.
Hey, Rex.
All right. Yeah, questions for me? Anyone? I don't have a
Give you right.
We're not going to have diffusion camp.
I think we should probably turn off this, right?